Good morning, traders. It is 8:02 a.m. Central Time on Monday, September 29, 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A lot happened over the weekend, and you can see here it's leading us a little lower from the rally that we had on Friday. Let's go down the list of what's going on. German September regional CPI generally higher than national consensus, still low overall. German economic minister says 2014 GDP could be below the 1.8% forecast due to Ukraine. Momentum still strong. This is a key item for the European markets here. Catalonia, President Mas officially called for a referendum on the independence on November 9th, as expected. The president of Spain says this is unconstitutional and has sent it to the higher court, which could take years to make a decision on. So we have a secession issue there. Protests escalated dramatically in Hong Kong as riot police resort to force. And then, of course, here in the U.S., we have PIMCO's gross departed, and the fund saw $10 billion of outflows. And the fund is bracing for more, maybe up to $100 billion or $2 trillion under management. U.S. Senator Warren called for hearings into relationships between some banks and New York Fed. And the New York Fed taped conversations between Goldman executives and Fed officials from 2012 suggest Fed unwilling to demand information about a transaction at Goldman Sachs. Russian foreign minister says it's time for Russia to modernize its nuclear and conventional weapons. Do not want a sanctions war. U.S.-Russia relations need a reset 2.0. So this is a reconciliatory tone there. It's nice to hear that. Seems like Russia is softening up on the Ukraine there. Air France pilots had a strike this weekend, and that ended yesterday. And then just a half hour ago, U.S. PCE core came in at 0.1% versus 0.0%. U.S. personal income at 0.3% in line. I believe there was a speaker, Feds Evans released some remarks, urges patience on rates, repeating September 24th remarks. As far as what's ahead today, at 9 o'clock Central, we have pending home sales negative 0.2% is the expectation. And then at 9:30, we have Dallas Fed Manufacturing expecting 10.0. And then we're looking at 11 o'clock Central, we have ECP's Visco speaks at a book presentation. I guess that's not significant, and it's significant. And then at 10:30 today, we have a 48 billion 3- and 6-month T-bill auction. Let's look at the technical picture. So what we have here, something that's pretty good for a recovery from the selling. So the market's been selling and selling. On Friday, we had the main target above at 87.50, and the expectation on Friday was a lower low on the session, which did not happen at all, which is very unusual. We had a trend day on Thursday. Thursday's trend day reversed Wednesday's trend day, and then Friday's trend day reversed Thursday's trend day. So what we have here is a higher time frame that is in action, positioning, and what we've done overnight is take all of that back, and we're trading at 1958 due to the Hong Kong Catalonian news, apparently. So the market here has been trending down, and then we finally reverse the point of control, the volume point of control up, which looks like it is done on the downside. Found buyers at 70.50 and has taken it up. So that was the narrative, and then the expectation coming into Thursday from Wednesday is 2003. Well, that was wrong. That was incorrect. The market did not agree with that at all. It opened in value in range after a trend day, and it proceeded to fall through and take back the entire rally on Thursday, and it bounced at the low. Given the way it closed, the location of the point of control, and the day type, the expectation was for Friday to make a lower low. It did not. It balanced inside of Thursday's value, and then it finally took off to the upside in the afternoon at 79.25 being the high. And so it looked like we had a reversal. There was a double distribution profile on Friday, so it was clear that buyers were stepping back in and taking it back up. And so it pushed almost to this key CLVN here at 1980. It stopped just 3 ticks short. So it looked like the sell side was done temporarily, but that is not the case. If we look at the overnight session, had some pretty decent volume. And where's my overnight? There we go. Pretty decent volume here at 300,000. Was not able to maintain this upper distribution, tested lower, and then proceeded to break lower here in the last half hour or so. We have a poor low on the overnight low. The profile is not saying anything to me at all. There's a fair amount of volume here at 67.75, and again at Friday's opening swing high 63.75. But overall, the market seems to be kind of in a riptide sort of thing, where it's finding that it's hard to maintain any direction at all, and it's being controlled by some other forces. So to me, it looks like the overnight basically trended down, except for this chunk here when the European markets opened. But if you look at the European markets, let's look at the Euro Stocks, which is the broader index. This is the product I cut my teeth on as a futures trader. You had the big sell-off on Thursday, a little bit of a recovery Friday, and then from the open, the European market is really trending down. We have a lower low on the entire month. So the European market here, that index is firmly down. So it changes the plan that I had when I went to bed last night slightly with this kind of action here. The expectation is for continued highs to 87.50, and I emphasize was to 87.50, and then the expectation was for it to chop around 87.50, given that it's a high volume node, a point of control, and then the expectation was for it to continue higher towards 95 on the close. That's all gone. This morning, the way this is shaping up is sellers are back in control. But is there cause for panic here by the buyers? Is there cause for celebration by the bears? I don't think so. Overall, what we have is what we had here. The market recovers, drops, recovers, drops, recovers, and what we're likely to do is pull down into this trend zone here. So I believe we have further to go. The key area below is around 48.50, 48.25. That CLVN there, right here. I believe it still has a little bit to go. So I expect today to be an attempt higher. I expect responsive buying to come in on the open, and I expect the market then to hit those down like a whack-a-mole and keep it down and start working its way down to 48 and a quarter, this key CLVN down below. But overall, I'm not seeing a panicky sort of selling. I'm not seeing the high time frame, the long time frame player in here. They're not in here. This seems to me to be pretty much all intermediate term with short-term traders in and out at various areas. So overall, I think this is still does not have the footprint of a market that's in a panic. It is recovering nicely from its sell-offs. It has done so twice here on Wednesday and again on Friday, and I don't think they're done yet. So we'll see what happens once we open, but I'm looking for a responsive buying back into Friday's range, and then I'm going to be looking very carefully at what type of test they do into the range. Is it something where they're able to push through and regain some of Friday's range up to 69.50 or so, this first LVN, or does it come into this fat area and gets hit, and then back out of Friday's range, in which case I'll be looking for 48 quarter, and I'll be stocking short. If the market pushes up, chops around, rotates down, and comes back in and takes out that early high, if it does make a high, then I would start to look for 75.50 and 77 for targets. Market's still near the low. The low looks weak, so the expectation is for it to eventually test this overnight low. But I do expect some sort of responsive buying coming into the morning. So the other thing is this is opening slightly out of range. If it opens here, it has 15 minutes to make any adjustments, but it's opening slightly out of range, so there's an elevated risk of an open drive. So once participants come into the stock market and they see that the gains they had on Friday have evaporated, they may become a seller and cause an open drive lower. Again, the target's 48 quarter, but an open drive from here would probably give us anywhere between 16 and 20 points. So that's in the 30s, 37.50 and 36. It's actually 36.75 that are the likely areas to test if we have an open drive. Okay. Again, I don't think this is a panic selling market yet. I think this is a corrective move. This is not unlike what we saw here on the 30th of July. I want to remind you that this week is let me pull up the calendar. This week is quarter end. It's quarter end, and there's likely to be a lot of jockeying of positions and so forth. So don't get yourself carried away. We have a fair amount on the calendar. We have HSBC manufacturing for China. We have the unemployment in Germany. We have UK GDP, CPI for Europe. There's just a lot on the calendar for the US tomorrow. Chicago PMI, prelim, and then consumer confidence, and a whole bunch of stuff. There's pretty much every day there's a central bank speaker. So this week is promising to be quite volatile and full of news. Don't forget that Friday, Wednesday we have ADP, and then Friday we have unemployment here in the U.S. So there's a lot on deck, is what I'm saying. Combined with a month end going into October, it's likely to be a pretty busy week. So keep your eyes open and pull out your risk plan and brush it off and make sure that you are going to be disciplined enough to execute it, because this is the kind of week that creates opportunity. But as we know in this business, wherever there's opportunity, there's risk, there's additional risk. So you have to be prepared for that risk. That's all I have for you for now. I'll be on Day Trading Radio at 10 Central, 11 Eastern for a weekly update and chit chat about the markets. If you want to join us for that, daytradingradio.com. Make sure the commercials are off, and then I'll catch you tomorrow morning. Good luck.